Hello learner, welcome to Manifested e-learning forum. My name is Emlyn Ngwiri and I'll be taking you through alternative investment analysis. And we are looking at a new topic. The topic is called hedge funds. Under hedge funds, we will specifically look at the following. Funds. We will look at the difference between hedge funds, or a comparative analysis. We will perform a comparative analysis between hedge funds and mutual funds. So, funds versus mutual funds. We will move ahead and look at the hedge fund strategies. What strategies are applicable under hedge funds? We know we will be able to note that hedge funds use a diverse or a multitude of strategies so that they can be able to incorporate leverage and the use of derivatives. Yeah, so we will be able to look at hedge fund strategies. Yeah. And then we will move ahead and look at biases. Biases in hedge funds, hedge fund indices. Hedge fund indices. With specific concentration, we will look at selection bias. Then we will move ahead and look at backfill bias. Backfill bias. Then we will finally look at survivorship bias. There. So that is what we are going to look at under lesson 1. And without any further ado, let's start by looking at the hedge funds versus mutual funds. But before we look at the hedge fund versus mutual funds, we will provide a brief description of the difference between, or rather of what hedge fund is. We can say this is hedge funds. There. So we are going to say that hedge funds are a pool of funds that use a multitude of strategies including the use of derivatives and leverage, like that. We can continue and say that hedge fund objectives are stated on an absolute basis. When I mean absolute basis, I mean that they are stated, say, for example, e.g., I can put in brackets 10%, like that, or on a relative basis, like that. When I mean relative basis is as compared to the existing benchmark, or as compared to the benchmark that relates to hedge fund, or specific benchmark there. So as compared to a benchmark, like that. Now we can be able to now concentrate now specifically and look at the hedge funds, the difference between, or the comparison between hedge funds and mutual funds there. So we can say hedge funds versus mutual funds. That. Now, what you need to understand is that hedge funds pool investor funds like that. So these are investors who are putting money into a fund here. You expect to note, or you will be able to note, that this is going to be managed professionally by what we call a hedge fund manager there. Now, the hedge fund manager will adopt or will use a multitude of strategies that are unique to the hedge fund. He or she will be given the chance to utilize derivatives and leverage. We will, in a short while, mention about the hedge fund strategies that this particular hedge fund manager can use to earn what we call alpha. Alpha is the excess return, the return that is beyond the benchmark, or the return that is beyond a predetermined minimum threshold that is required there in terms of the objectives there. So we are saying hedge funds, they just pool the funds like that. But one key thing that you will be able to note is that these hedge funds, being a broad group of strategies, they use various investment hedge fund strategies that incorporate the use of derivatives, as the way I've said, and leverage. As well, they are less regulated. Hedge funds, as compared to mutual funds, are less regulated, and meaning that in terms of reporting requirements, they are not subject to very strict or stringent reporting requirements the way mutual funds are. Again, we can say that hedge funds offer their products to qualified investors as compared to mutual funds. Mutual funds are do not have that issue about qualification, that this investor has got their bank account has got 5 billion, for example, Kenya shillings, and now they are qualified to invest in hedge funds. For mutual funds, it's not a must. Any individual can be able to invest in mutual funds, whether it is a money market fund, a bond fund, or a balanced fund. There, those are some of the differences that we are going to mention as differences between hedge funds and mutual funds. So we can start by saying that hedge funds are less regulated. Funds are less regulated as compared to mutual funds, and as such we are saying that they do not have disclosure requirements, and as such